Hello, and welcome to SEMA's Shifting Gears Back to Business, a four-part webinar series. This series is focused on providing tips and tools for automotive aftermarket businesses to navigate their business operations during this strange COVID-19 environment. My name is Gavin Knapp. I'm the Director of Market Research here at SEMA. And before I bring on today's speaker, Gene Marks, to talk about cash flow tactics, I have a little bit of quick housekeeping for you. Today's session, we're going to go for about an hour, and throughout our time, we invite you to find the questions tab over there in your dashboard, submit your questions, tell us what you need to know, help us out, and help us help you. So last week, we kicked off the Shifting Gears series with the topic of building customer confidence. And today we have another great topic for you, cash flow tactics for the automotive aftermarket industry to position your company for post-COVID growth. We all know there's been a lot of disruption over the last couple of months. We've gotten a lot of feedback that businesses in our industry are certainly ramping back up. But there's obviously been some disruption, and with that comes cash flow problems. So I'd like to introduce our speaker today, Gene Marks, CPA with the Marks Group. Nationally, Gene appears regularly on MSNBC and Fox News, as well as the John Batchelor Show and SiriusXM's Wharton Business Channel, where he talks about the financial, economic, and technology issues that affect business leaders today. Through his keynotes and breakout sessions, Gene helps business owners, executives, and managers understand the trends that will affect their companies and, most importantly, the actions they can take to continue to grow and profit. So, Gene, the screen is yours.
Gavin, thank you very much. And guys, thank you so much for joining me. I'm excited to be here. And I'm going to talk, just so you guys know, for about, I don't know, half an hour or so, and then I'm going to open things up for questions. So as Gavin said, if you have any questions whatsoever, by all means, put them in the Q&A panel, and I'll keep about 15 minutes to answer them. If for some reason we don't have time at the end for that, you're going to have my email address as well, so you can email me directly with any questions. This is a financial discussion that we are going to have, and it is serious stuff. In the 25 years that I've been running my business, again, I'm a CPA. We do technology, financial management. I mean, guys, I've never seen such uncertainty as we're looking at right now. I mean, uncertainty has always been around, but we're all facing a situation where there's a lot of COVID cases still on the rise in certain areas, other places looking to potentially shut down, quarantine. We have a presidential election coming up in November where our incumbent, there's a lot of uncertainty about what he'll do in a second term as opposed to his opponent, all for good and for bad, but there's a lot of uncertainty that's out there. So what we've got to do as business owners is we have got to conserve and we have got to manage our cash correctly. And I am going to be running through a bunch of tactics to do that. These are all things that I have learned from very smart business owners who have taught me these things over the years. And all I am doing is I want to share those strategies with you. So if you are ready to do that, let's get into that. Now, first of all, if you notice on the left-hand side, new book that I just have came out just 2 weeks ago called Want More Cash, 100 plus ideas and strategies for increasing your company's cash flow this year. You can get it on Amazon, and a lot of the stuff I'm going to talk about comes from this book. So it's very, very much very consistent with what our theme is today. Okay. When we talk about cash, the first thing that we want to talk about is watching the numbers. When I talk about watching the numbers, here are the numbers. I have been telling my clients for years, a lot of people have been shaking their heads and laughing at me when I say, listen, you need to have at least 6 months of cash or cash availability in your business if you want to continue on. Some companies get a little bit overstretched with what their cash is. And when I talk about cash, I also mean availability. It doesn't necessarily mean that you've got to have the cash in your company's bank account, but you have access to funds if you need it. And what we saw from this pandemic, there are a lot of businesses in this industry that were essentially shut down. Even if you were an essential business, a lot of your numbers were curtailed. And I know a lot of companies had to dig into their savings or dig into their lines of credit to do that. And for some of my clients that were able to do that, that's great. Others that did not have that kind of a cushion there, they had many more challenges as well. So going forward, if we're talking about lessons learned from this whole experience, you need to have about 6 months of cash on hand. That is across the board in the automotive aftermarket industry. That's number one. Number two, you need to get into the habit of forecasting your cash. All of my smartest clients do this, and you should be doing it as well. And forecasting your cash is not as difficult as you think it may be. And let me explain to you why. To do a cash forecast requires this. You take your most recent financials, your year-to-date income statement from your accounting system, whether it's QuickBooks or whatnot. Maybe you have your accountant or your bookkeeper help you do this, and you put it onto a spreadsheet. And all I want you to do is I want you to look at those numbers, and I want you to project out into the future the next 3 months. That's 90 days. And projecting into the future, not as hard as you think. A lot of the expenses in your business, pretty much recurring, like rent or payroll or certain overheads like utilities or internet expense. I think you can pretty much forecast out what those are going to be over the next 90 days. Your sales are going to be a thing that you're going to have to figure out. So if you look at your backlog, you look at your pipeline, you look at where you were last year, you talk to your salespeople in your office, you need to come up with what you think your sales numbers will be on over for the next 90 days. Break it out by month if you can. And all you need to do is apply a margin to those sales. So if you know that you're making about 30% on a sale or 25% on a sale, on average, if that's what you think your margin is, it doesn't have to be science. It doesn't have to be that accurate or exact, but on average, you apply your margin. So if you know what your margins are for sales and you know what all of your typical recurring expenses are over the next 90 days, you're able to look ahead. The last step when you do your forecast is you want to figure out if there's any extraordinary expenses or money coming in. Do you have a tax payment? Are you paying like a balloon payment on a debt? Do you have money coming in from a specific sale, or are you buying certain types of equipment? Think about what that will be over the next 90 days and put that on your spreadsheet as well. If you get in the habit of doing a forecast every 90 days and you do it once a month, I promise you, you will have a much better control on what your cash is. And I'm only telling you this because that's what my smartest clients do as well. They avoid surprises and they know what's coming up in the future. Forecasting is really big. Next, every month, I want you to read your general ledger. Your general ledger is essentially the diary in your business. And what I mean by the diary is that every time a check gets made or an invoice is received or a cash payment is received, it goes into your general ledger. Somebody's recording it into your accounting system, like your bookkeeper. Print it out, take it into your office, close your door, pour yourself a cup of coffee, or depending on how things have been, a shot of Jack Daniels, and sit through and read through your general ledger. You will learn things about your business because the devil is in the details. You will ask questions about certain transactions. You will get used to seeing certain things. You will be surprised when certain things aren't showing up. When you ask questions of your bookkeeper or your accounting person, I'm sure most of the time they will have answers, but if they don't, it will raise that kind of a red flag to you. But you will get your arms around where your money is going, and the details of your business in the general ledger are what's going to be driving your management of cash flow going forward. So once a month, sit down and read your general ledger. Also, I want you to have a daily flash report. A flash report is a one-pager. You can have it emailed to you, or you can have a lot of my clients, very old school, still like to just print it out and have it on their desk every morning. You can have an admin do this for you. This is not something that requires a lot of accounting expertise. But what I want you to do is I want you to have the key daily numbers in your business at your fingertips every day. What is your cash balance today? What are your receivables? What are your payables? What is your backlog? What is your revenues real to date? What are your labor hours year to date? Those are some of the key metrics that you want to be following in your business. And there are others in the aftermarket industry that we can talk about in more detail later. But the bottom line is you want a daily report of of what's going on in your business. And here's the key thing about a flash report. Make sure that it is always showing prior numbers as a benchmark. For example, if you're showing that you have $100 in the bank of cash today, is that good? Is that bad? Is it up? Did it go down? You want to make sure that you're showing a prior period, maybe the beginning of the year. What was your cash at the beginning of the year? What is it now? Are you moving forward or are you moving back? If you are having your admin just take from your accounting system your year-to-date sales, that's great. Your year-to-date sales were $150,000. Is that good? Is that where we were year to date this time last year? Are we behind? Are we ahead? Smart business owners that I talk to, they know those numbers. The final thing is this: hire a CPA. Even if every couple of years they come in and they do a financial statement for you, having an outsider look at your books will teach you a lot about where your cash is going and how you can better manage your cash. CPAs do certain types of financial reports: a compilation report, a review report, or an audit report. For most of us, a compilation is really the fine for what your business is. They will cost you a few $1,000s, and it's something that you do every couple of years. But what a CPA will do when they put together a compilation is they will compare your numbers to their other clients. They can compare your numbers to what other people in the industry are doing. They can look at your books and your overall financials and give you some insights. They can tell you, hey, you know what? Your research expenses are not as high as some of the other clients that I have, or your margins tend to be a little bit lower than what I see in this industry. All of that in the end impacts your cash. So target 6 months of cash on hand. Start forecasting ahead 90 days. Do a monthly spreadsheet where you do that. Read your general ledger, the details of what's going on in your business. Get a daily flash report and hire a CPA. All of those are cash management tactics, just basic financial and accounting stuff that you need to be doing when you're running your business. And again, this is just what my more successful clients are doing as well. So number one, Matt, watching the numbers. So what have we learned so far? You need 6 months of cash on hand and reports and advisors to help you keep a close eye on what your cash is. All right, let's turn next to your vendors. And let me share with you just some advice on managing your vendors. Just a few bits that I think will help you conserve cash when you're managing your vendors. Number one thing that I have learned over a number of years is this: only pay your bills twice a month. I come across so many clients that they've got cash going out the door, they're writing checks, they're sending online payments, it's all over the place. That is no way to manage your cash. The best clients that I have met, the ones that have the most control of their cash, they limit when they're paying out their bills. Now, some of your vendors may have expectations of getting paid more on certain days or whatever. Trust me, they'll get used to a twice a month schedule if they want to get their money. Pick 2 days a month, maybe the 10th and the 25th of every month, or the 2nd and 4th Tuesday of every month. That's your cash paying days. No cash goes out the door in between. When you're doing it that way, you will be able to have a much better control of what your bills are coming due, when you're going to pay them, and what your cash needs will be going forward. So bring it down to just twice a month. That's number one. Number two, try to pay your bills early. It drives me nuts when I hear certain experts say, oh, you can use your vendors for financing, you know, they're better than the bank. That is, to me, horrible advice. Your vendors, your suppliers, these people are partners in your business. Think about how you would feel if you're being monkeyed around by some company that's not paying your bills, and then they come to you with a rush order or some part that they need from you that's really, really important, and you've got another customer who pays their bills on time, even early, and is a much, much better customer to get along with. Who are you going to give priority to? You're going to give priority to those customers that pay their bills and that you like doing business with. You want to be the same way with your vendors. I can't think of anybody more important to your business and your cash flow than the people that you're paying for equipment and parts and other things for the machinery and for the operations in your business. So pay them on time for sure. And if you can, pay them early, particularly if they are offering discounts. Some vendors are still offering like 2% net 10 discounts. If you pay within 10 days, you get a 2% discount. Let me tell you something right now. Given the negative interest rates that you're earning with your money in the bank, taking advantage of paying those vendors early and taking their discounts will make you way more money than stringing them along and extrapolating out their payments longer than they need to be. So pay them and pay them early. Have good relationship with your vendors. Number 3, check out this technology. It's called Plastic, Plastiq. And the reason why I like these guys, and I just kind of stumbled onto them earlier this year, is this. They will allow you to use your credit card for any vendor that you want, regardless if they take credit cards or not. When you set yourself up with Plastic, you set up your credit card, and if you want to pay a vendor, you pay it through Plastic. Plastic will turn around and send them a check on your behalf. Why is that good for you? Well, number 1 is you can use your credit card throughout the month without drawing down your cash until you pay your credit card balance at the end of the month. That's number 1. Number 2, you can make big purchases from vendors and take advantage of their discounts as well, because depending on how big your credit line is, you can take advantage of it as long as you pay that off again by the end of the month. Number 3, if you have a credit card that gives you a cashback discount or points, you can take advantage of that for all of the purchases throughout your business. And finally, if you are doing business with any overseas suppliers where you're paying bank fees and it's more difficult to do work with them, having this credit card available, just paying through your credit card, makes the whole transaction a lot more easier. Plastic is one of these technologies I just have been recommending to my clients. People have been loving them. Something that you should consider. Will pay you back. There is a fee involved. It's like 2%, but their savings will be a multiple of what that fee is. Also, I like this service called Receipt Bank or Bill.com. What those services are is that they make your accounts payable process seamless and cut down on your overhead for accounts payable. Because here's what they do. If you sign on with Receipt Bank, your vendors will send you their invoices via email. You no longer accept a manual invoice or anything paper by mail. They will send it to you by email to an address that Receipt Bank will give to you. Receipt Bank will see that attached document, that PDF, and it will scan it itself. It is able to extract the information from that invoice, bring it into a format where somebody internally can review, and boom, one button that goes right into your accounting system. Once you get this process down, particularly with vendors that you're working with all the time, your invoices are coming in and going right into your accounting system. There's no data entry errors. There's no delays in the invoices getting in. And there's no additional time spent by an accounts payable person getting the invoice, opening the invoice, checking it out, going, keying it in wrong, going back to correct it again. It saves overhead and saves accounting costs. So paying your vendors twice a month controls your cash. Paying them early, particularly if they offer a discount, will save you cash. Paying them early, or at least on time anyway, will have good, solid relationships with your vendors, and you will need them at some point in the future. Using a service like Plastic will allow you to take all the advantages of using a credit card, from cashback discounts to to rewards, to floating a month's worth of payments as well. So Plastic is a really great resource for you to consider. And Receipt Bank or Bill.com, this accounts payable automation technology, particularly if you have a lot of people working from home, will streamline out that process in a really great way. So that's how you manage your vendors better. Those are just some cash flow tips on doing that. Okay, so let's see what we've learned so far. You need 6 months of cash on hand and reports and advisors to help you keep a close eye, and bring order to your payables. Don't abuse your suppliers, and leverage technology to better control your disbursements. All of these things will have an impact on your cash flow this year. Okay, we talked about vendors. Let's now talk about our customers. So there are a few things, again, that I've learned over the years that will help impact your cash flow. And let me share with you what they are. The first thing is about accepting all payments. All payments. If you are only accepting checks or what have you, you can't just do that. You have to be open to accepting credit card payments, mobile payments, even Bitcoin if you have significant enough customers that are making payments that way. But to increase your cash flow, you need to actually accept the cash. So make sure you're accepting all payments from your customers and set yourself up with all payment services to do that. Take deposits in advance, a very, very common methodology for running your business nowadays. You have a job of a certain size, not uncommon to ask for a third down, even half down, getting some of that money up front. That will help pay for the overhead of getting the work done. And then you get paid the second half or the remaining amount. Those are your profits. Taking a deposit is a very, very common and very effective way to increase your cash flow and very much recurring in this year. Leveraging your customer relationship management system and artificial intelligence. Talk to, if you have a CRM system like Salesforce or Zoho or something like that, or even if you're just using QuickBooks or Sage or Epicor, these vendors now have built in artificial intelligence using workflow. And the artificial intelligence means that you can be alerted in advance before an invoice comes overdue. Your customers can be automatically nudged if an invoice is coming due. You can get alerts if an order comes in that's above somebody's credit limit, or if somebody took an order where your inventory levels are below what's needed to fulfill that order. More and more of my clients are digging into this artificial intelligence so that they can get information in advance and be able to take actions before there's a problem. Because when problems occur, that's when cash flow gets hurt. So leverage your CRM system and leverage artificial intelligence. If you've got any of the vendors I mentioned, call them and ask to spend an hour with you to go over the workflow and artificial intelligence features that they're providing, because a lot of that is new and a lot of it you're probably not aware of it. It will save you time and help stave off potential cash flow problems in the future. And finally, if you're not doing this already, we're reading in the news just how the Postal Service is having all sorts of issues right now. We all know that there's a delay in getting invoices out the door anyway. You should not be mailing invoices. You should not be receiving payments, from any other source than online. When you do a job, your accounting system should be able to accommodate sending out an invoice, whether it's by email or an email with an attached PDF. And on that same email should have a button for you to get payment right for it online. I realize there's an extra service charge involved. I don't care about the service charge. Bake that into your fees or to your prices, because you want to give the ability of getting that invoice in the hand of your customer right away without delay, and just letting them pay that customer as soon as they can possibly pay it. You want to facilitate that to the extent possible. So accept every single form of payment that's out there. That's credit cards, mobile, digital payments, Apple Pay, Google Pay. You need to make sure you're open up to accept those payments to make it easier for your customers. Take deposits in advance where you can. Leverage CRM and artificial intelligence. Talk to your software vendors about doing that, and use online invoicing and payments. Make sure you're not doing any of this manually. So again, we've talked about needing 6 months of cash on hand, bringing order to your accounts payable system, and take any cash any way you can get it, and focus on your best customers and most profitable jobs. Hopefully this advice is helping you. I've got two big more areas to share with you, and then we'll stop for a little bit and go into Q&A. And if you have any questions, please put them through on the Q&A pane. Gavin will come on back and fire away some questions, and I hope I can help you. So my final two things has to do with financing. This is another topic that we can actually spend a lot more time on, but let me just share with you some things about financing and pay attention right now. If you are in business right now and you need working capital, you want to buy a piece of equipment, you want to maybe buy some inventory, hire an employee, buy another business or some real estate, talk to the Small Business Administration about a Section 7A loan. It is critical right now. And why? Is because of the CARES Act. If you get, and listen please, a Section 7A loan through an SBA banker, and you close on it before September 27th, because of the CARES Act, you will have the first 6 months of principal and interest, you ready? Completely forgiven. So let me put this into financial terms for you. Say you want to buy some equipment for your place. Say you want to buy another business. You want to buy some inventory. You want to buy some real estate, or you just need working capital. You can borrow like $500,000 and you will not have to pay $33,000 of it. That is because of the CARES Act right now, and it expires on September 27th. You will have to go through due diligence. The terms of the loan will vary depending on what you're going to be using the money for. The interest rates are low, but they're at market rates. But the banks have this money guaranteed from the federal government. My goodness, if you need capital to grow right now, this is an amazing opportunity for you to get it and save a ton of money on cash. And if you have questions about it, put it through the Q&A panel, and I'll be happy to take some when we go to Q&A in just a few minutes. Leverage tax deferrals and tax credits. You do not need to apply for this. You can actually leverage any tax deferral. You don't have to pay your company corporate payroll taxes, the FICA tax now, through the end of the year. Just you don't have to pay it. You can defer it. Pay 50% back in 2020, the other 50% back in 2021. That is an enormous interest-free loan from the government. Maybe you don't need it. Maybe you would like the cash on hand. And if that's the case, you want to have that cash in the bank now rather than in the future. So defer your payroll taxes if everybody's eligible. Look into the employee retention tax credit. If your business has suffered more than a 50% revenue decline, it's a big payroll tax credit that you can get back. Not a deferral, but a credit that will not only save cash, but generate cash for you. Applying for the Paycheck Protection Program, that period is done. Hopefully we will have another round of it in the next stimulus bill, which I expect to happen in the next couple of weeks. But right now, maximizing your PPP forgiveness if you have gotten loans under Paycheck Protection. Remember, take the full 24 weeks, wait until the end of the year to restore your head count, because you have until December 31st to do that. And you don't even have to put in for forgiveness until 10 months after your PPP loan is ended. So you don't, just relax, do your business, make sure you got your documentation together, and maybe you won't even have to apply for forgiveness if this new stimulus round comes around. But in the meantime, just remember you want to prepare yourself for getting forgiveness on those PPP loans for 2020. You'll do that in 2021. And finally, 27 states offer something called work sharing programs. Ask your state about it or Google for your state and work sharing. If you go and apply for a work sharing program, and any company can apply, the state will pay a portion of your compensation. You pay the remainder of the compensation. You pay less now because the state is picking up the bill for a portion of it. The state is happy because your employees don't go on unemployment, and therefore both of you can continue on employing your people at the same compensation rates, but you're sharing the compensation with your state. So ask about state work sharing programs. It's actually been around for a while now, but it's getting a lot more attention because of the COVID situation and the CARES Act. So we've learned already, of course, needing 6 months of cash. We've learned about bringing order to our payables. We've learned about taking cash, getting it in as more as you can and focusing on your most profitable customers and jobs. And just like I've mentioned, take advantage of all that government funding that's out there, including tax incentives, and revisit your banking relationships. Okay, in the last couple of minutes I have before we break for Q&A, let me just go through just a few operational things that I think would be really, really important for you to know. So for starters, if you haven't already invested in a cloud-based human resources system and your employees are working from home, you really should consider doing that. They're inexpensive, maybe hundreds of dollars a year is what they turn out to be. Everything gets mobilized, your payroll gets mobilized, your employee can do all their HR stuff. They can put in for time off, they can put in for sick days, you can do employee evaluations and performance reviews that way. Some of the big names out there, Paychex, Zenefits, Bamboo HR, those are some of the numbers, and there's plenty of others that are around as well. An HR system is a great way, cloud-based, to manage your employees, keep your HR costs down, because it pushes them to do the work and the data input and manage all their HR stuff themselves instead of you having to employ somebody in your office to do it. Require vacations, particularly among your financial your financial people. Whenever there's fraud in a business, it's always because somebody's been on vacation and then somebody's filling in for them and they find out that something goofy was being done. So you really want to protect your cash. Make sure everybody, particularly the people in your financial side, are taking vacations at least 2 times a year, because that way you'll have it's a basic internal control just in case any funny business is going on. Workers' comp. If you sent your employees home to work from home because your state required doing it, you need to readdress your workers' comp insurance, because when they're all at home, they're automatically classified as clerical workers. A lot of my clients had workers that were classified in more riskier classifications, so they were paying for that. Then they sent them home to do their work, and they're still paying for them at those riskier classifications. So if your employees were sent home for a month, 2 months, if they're still at home now, you need to review your workers' comp with your workers' comp insurance agent, because there is a strong possibility that you are overpaying your premiums because you're paying more for riskier classifications of people working from home that they really shouldn't be doing. So ask for a workers' comp review. And finally, before I turn this back over to Gavin and we'll go through some Q&A, consider getting healthcare reimbursement accounts. You can easily set up a plan. You can put money away pre-tax for your employees. They don't get taxed on it. You get a deduction for it, and your employees can use that money to go out on the market and buy their own health insurance. It is a great way to limit your health insurance costs, which in the end limits your cash. So, final review of some of these tips that I've just shared with you over the past half an hour. Keep 6 months of cash on hand. Get reports like forecasts and flash reports. Hire a CPA to help you at least every couple of years to take a look at your numbers. Bring order to your payables. Pay just twice a month. Don't abuse your suppliers. In fact, pay them early. Leverage technology like Plastic and Receipt Bank and Bill.com to save money on your payments and also to streamline your payables process. Take cash any way you can. Focus on your best customers, your most profitable jobs. Get money in from any digital payment necessary. Take deposits in advance as well. Take advantage of all government funding. The Section 7A loan, please, you have until September 27th to apply to an SBA banker. They will lend you money for all sorts of different resources for your working capital, buying equipment. Your first 6 months of principal and interest, you don't have to pay. In addition to that, consider those tax deferrals, payroll tax deferrals, or payroll tax credits as well. All of those are a way for funding that can help you out, as well as work share programs in your state. And finally, just some operational things that you want to be aware of. Require vacations in your business. Renegotiate that workers' comp because you're probably overpaying it. And consider healthcare reimbursement accounts as a way to keep your healthcare costs under control. Boy, that was a lot of information. Am I right? Gavin, if you're still there, hopefully you haven't fallen asleep or anything like that. I know I've shared a lot. So let's open things up to Q&A and let's see what questions that we have. So Gavin, I'll let you jump on.
I really don't think anybody could fall asleep to all of that. Hey, that was awesome information. And I've got some questions here, and I want to start with one. Let's say you're a small business, right? COVID hit, and you lost a lot of revenue, maybe in April, in May. Things are moving back forward, but you're feeling like you're really behind, right? What would be your best advice for somebody like that? Where do they start? How do they bring themselves back to not feeling like they're behind the 8 ball here?
Well, first of all, there's a few things that you have to do as a business when you're feeling behind. And understand this, Gavin, we all feel like we're behind. Okay, so you have to understand that you're not alone in that situation at all. You have to have a plan for moving forward. And that plan kind of gets back to one of the things that I recommended early on when I started speaking, is about a forecast. If you're feeling behind, the best way to fix that problem is to look forward. And the best way to look forward is to start forecasting where your business is going to go. So look at where your operations are year to date, put that on a spreadsheet, and start thinking forward and projecting forward what your expenses are going to be and what your revenues are going to be. You're going to make certain assumptions and you're going to make certain goals for yourself and start going after those goals. And if you update that every month and if you have a plan, a forecast of where you're going to be, you're not going to turn things around overnight, but over time, you will be able to do that. And I just found, just as a business owner myself, Gavin, I mean, like, there is nothing more therapeutic than to me diving into the actual numbers of my business and making some goals and making some plans and then getting out there and executing on those plans. That is the best piece of advice I can give to any business owner.
Awesome. That's great. So let me take that another step forward. So you're in that kind of position, and maybe, you went through this and you shut down a lot of your spending.
Right.
And now you're getting to a point where you've got some more cash flow coming in. Where should you inject that spending back into your business? What things that are going to give you the most ROI, the most benefit? Is it marketing? Is it R&D, sales? What are the things you want to sort of force online first?
I'm going to tell you right now, this is, with uncertainty that comes with economic downturns like that, comes a lot of opportunities, Gavin. So if you've got some cash, you're starting to build that back up again, and you're in that sort of situation, and trust me, a lot of businesses are not in that situation, you should be looking around for deals right now. When I mean deals is this, the labor market, for example. I mean, Gavin, it was like just a few months ago, our biggest problem was finding good people for our companies. Now there are millions of people that are unemployed. And I know that's sad, but a lot of these people are not going to go back to their original employers for a host of reasons. As you're ramping back up again, and you've got some additional cash, now is the time to invest in talent. We've been looking for these people now, and it is not a lie that it is your people that are your company's greatest asset. So when I talk to some of my clients, they're out looking for, for good people that they can hire because they're thinking ahead the next 6 months to 12 months and know that the people they hire and they take care of now are going to pay them back dividends in the future. One other thing, if I can say, there again, with an economic downturn, it's like winners and losers. So there are people out there that are distressed. They're selling equipment at much lower market value than they were thinking of. And a lot of companies are thinking of selling their businesses. I have a good relationship with a few business broker marketplaces, and they're reporting to me a huge amount of interest among both buyers and sellers of businesses. I mean, the average age of a typical small business owner is about 52 years old. And a lot of people I talk to have had it with running a business even before COVID hits, Now we're ready to jump off a cliff. So it's an opportunity right now. If you're looking to buy a business, that there's a big supply of people looking to get out. Interest rates are low right now. And in addition to that, capital gains rates are very low. Tax rates are low as well. All that could change after November. So if you're a millennial, if you're a young entrepreneur, if you're just you have an existing business and you want to buy a competitor, now is the time that you should consider doing that. So my advice, getting back to your original question, it's to be aggressive. If you've got additional cash, now is the time to make some strategic investments, people, assets, companies. There are great deals out there to take advantage of that will benefit you. Think ahead for the next 5-10 years.
Awesome. Yes. You did talk about some of those loan programs and things. Seems like a perfect time to start making those investments.
Yeah, and in fact, if I could even add to that, the Section 7A loans can finance those types of purchases. And if you buy equipment with that, there is a huge tax deduction. It's called the Section 179 tax deduction, where you can pretty much write off the whole purchase in the first year. So there's all these incentives right now that the government is giving you to go out and make these investments. And, if you got a few extra bucks or the ability to finance it, go for it.
Cool. So let me change it up a little bit and thinking about, you've got your business, maybe it's a retail business. You talked about some of these other ways of streamlining things, but they have some potential extra fees and whatnot with them. How do you go about figuring out what to pass along to the consumer, what to keep in-house, and are consumers ready to take on those extra fees or even price hikes?
That's such a great question. I realize this is not an automotive aftermarket example, but it really does apply. I wrote about this recently, Gavin, because there has been this trend for some restaurants and some service providers like dentists. They've been tacking on an extra fee, a COVID fee, because they have to buy additional equipment or they're incurring extra costs. And I think that you could not be more wrong in that approach. I mean, you go to a restaurant and you see like an extra fee tacked onto the bill, it makes you question. I'm not saying that you won't pay it, but it's just psychologically, it does not work. So what does work is this: any extra cost that you have as a business, any extra fees that you might be paying to get safety, health, protective equipment, whatever the case is, you need to build that into your pricing. So rather than paying an extra $10 fee for a burger or a $5 fee on a check, if that same restaurant owner, if that retail store owner that's selling auto parts or equipment, for example, were to be able to build that extra fee into their overall pricing and spread it out among all of their products that they sell, then the increase in price is like de minimis. It could be, in the case, a few cents or a few dollars per sale, something that your customers aren't even going to know. So here's my advice. We're talking about cash flow. You need to figure out what the costs are going to be, these additional costs, maybe over the next 6 or 12 months. Then what you want to do is you want to look at what your sales are projected over that current period of time. And you can even use what your sales have been in the past. And you then take it as a percentage of that sales. You say, if I look at my extra costs for this protective equipment comes out to be an extra, 0.5% of sales, then across the board, increase your selling prices by just 0.5% across the board. And in that way, as people are buying their stuff, your costs are baked in to what your selling price in, and your customers are likely not going to notice it. Even if you might want to go back and revisit it 6 months from now, but I got news for you. You could probably pass through that cost increase without people knowing about it and then keeping it for a long period of time. So long answer to a short question, Gavin, but you got to look at the overall additional cost as it compares to your overall revenues and then apply it across all of your products, and you will catch up that way. And by the way, that's what big companies do. When electric companies or airlines or service companies, hotels, when they have additional costs, they're not tacking on an additional fee to your bill. They're just increasing the price of your room by a few dollars, which extrapolated across their entire operations, that covers for the additional overhead that they're incurring. You've got to be doing the same thing.
Awesome. Well, I know we've got just a couple more minutes with you here. I'm going to throw out, open forum. Do you have a golden rule for cash flow?
Yeah, my golden rule is what I started off this whole conversation is you've got to keep 6 months of cash on hand. Okay, that's what you've got to have the goal to, and which means that every decision that you make regarding cash will either positively or negatively impact that objective, and you've got to have that in the back of your mind. So you've got to have those cash reserves, and the reason why is because not only for survival, but people make better decisions, better purchasing decisions when they're sitting on a little bit of, I don't want to use a profanity here, but when they're sitting a little bit of FU money, Gavin, they can make some better decisions when they're buying and selling. Okay, that's the biggest piece of cash advice I can give to you.
Awesome. Gene, really, really appreciate you being here. I think this is awesome information. I know I learned a lot, so I'm hoping our attendees are taking away some good stuff from this. Thank you very much for being here.
Thank you, sir. I'm going to sign off, and best wishes. My email address, guys, is on the bottom of the slide here, so feel free to email me if you've got a specific question about your business. I'm completely happy to respond back to you. Okay?
Thank you.
Thank you, sir. Yep.
All right. Well, that wraps up this episode of Shifting Gears Back to Business. Thank you all for attending. And of course, thanks, Gene, for the insight. We really do hope you walked away with some ideas you can implement in your business. I found some great ones. I mean, really, it's amazing how much free money seems to be out there right now with the relief programs, loan programs. I hope all of you found some good tips in there that you can go utilize. We'll be sending out a recording of today's webinar to refer back to. You can even share it with your colleagues. You may also receive a short survey, a little invite. We'd love to know your feedback. We always want to get better. You can help us do that. So, looking forward. All right, we'll be back next Wednesday, same bat time, same bat channel, with Corey Perlman to talk about digital do's and don'ts during times of uncertainty. If you're not registered, go to our website, SEMA.org/reopen, REOPEN. Click on the webinars button at the top. And Gene will be back on September 2nd to wrap up our 4-part series with the topic Beyond the Pandemic. Hope you guys all have a great day. I hope you all learned something, and we really do appreciate you joining us here for our webinar series. Thank you.